guess. Minnesota slogan.
Saying that's it, 60
There's always
what?
next one.
Hey, at least the Gophers and the Badgers are back on.
The Wisconsin guy puts his head down and smiles.
It's, well, we can't get into it, but when I was growing up, it was never like that.
Just imagine if you couldn't win
You've been on a pretty good
with a
run.
Hall of Fame quarterback for 20 years straight. That's how bad it would be.
We'd like to try.
I hope the highs are as high as the lows are low.
Right.
Maybe eventually we'll find out on the highs.
All right, it is 3 o'clock. We will call the regularly scheduled Hutchinson Utilities Commission meeting to order. Commission, any conflicts of interest to declare?
None.
None. Consent agenda. Anyone have any items to pull out of there? Otherwise, we'll entertain a motion for approval.
So moved.
I'll second.
Motion by Monty and second by Bob to approve the consent agenda. All in favor, signify by saying aye.
Aye.
Any opposed? All right, the financial statements. Jared? Nice to have you back, Jared.
Who's the new guy?
I don't think there was a lot of change. I didn't really prepare anything, actually.
Well, since we've seen you, there's been a lot of change.
That is true. No, it was pretty, everything's been fairly steady all year, so nothing, no major ups, downs. Even our accounts receivable, I wouldn't say, has gone up a ton, even with everything going on. I mean, it's gone up some. I'll probably get you a better listing of that maybe next month. I can work on that. But we haven't seen the massive increase in accounts receivable that other utilities have. Yeah, other than that, no power cost adjustment again for November, so I think there were about 6 months where we haven't had those, and we haven't had that in 5-6 years, I bet. Other than that, I didn't have anything else. Jeremy, anything?
I just noted a couple things. Obviously, the purchase power is down. Most of that, we're trending behind 2019. We're about $900,000 less in purchase power through November. Most of that is just buying it off the market. So we're about $741,000 less this year buying off the market from last year. Some of that has to do with just our consumption is a little bit down. So through November, we've purchased just under 48,000 megawatt hours. Through November this year, last year we were just over 60,000. So some of it's we've purchased less, but the other piece, like I mentioned over the last couple of months, is it's been cheaper. So our average price through November last year was just over $26. This year it's just under 18. So we've had a reduction in the amount we've had to purchase, and we've had about an $8 megawatt hour decrease in price. So that makes up most of the purchased power reduction this year. The one saving grace, I will say, when you look at the consumption side of things, we're just under 1% below last year's numbers. I will tell you we're probably in the top 1% of utilities nationwide that are even that close to last year's number. Most of them are trending in that 5 to 10% reduction in usage because of COVID.
So you think without COVID, we actually might have had an increase?
I think we'd be right at about where we were at last year. We had an uptick obviously in the residential side because people were at home, but a lot of that's offset by the reduction in the closures. So I think we'd still be trending right about where we were last year,
Okay.
fairly close. We're just seeing some of the shift. So we'd be at 19 or maybe a hair better, but that's substantially better than most people. And I talked to a lot of the wholesale suppliers and a lot of people next year at AEP, some of those that have municipals and IOUs around the country. When I tell them we're only turning about 1%, they can't believe that. They're like, that's amazing that you guys are only that far behind. And so that's a bright spot from our side, even though we're seeing a little bit of a difference load-wise. We're still doing fairly well. The other piece on the operating expense side of things, we're significantly below last year. So I went back and kind of took a look at why we were under on some of those areas. Some of that had to do with Unit 1 and Unit 5. We did some repainting on Unit 1 last year. That was in some of our operating budget. We had some increased, some maintenance and some materials on Unit 5 that we didn't have this year. And then also last year, we ended up purchasing the SCADA system and started that whole process of the SCADA system improvements, and then starting to put RTUs. And so a lot of those things weren't in this year's budget, so that's why your operating expenses side this year is a little bit is down significantly. So that 230,000 that we're lower this year has to really do with those three items: maintenance, things like Unit 1, 5, and then the SCADA system. On the gas side, obviously we've had warmer than normal. November, December has been fairly warm, although we've hit a little cold stretch here. It's supposed to be back up in the 40s this week, so we'll have a little bit of reprieve there, but then dip back down. So we've been trending behind 5 to 6% every year on the natural gas. So that even started when you look back at January, February, March, we were behind through those months. But still, so we're trending consistently, even though we're behind 19 numbers. The other pieces, our credits are down a couple $100,000. Some of that has to do with less consumption, but the bigger pieces are increased pricing for natural gas. A lot of our baseload gas is up 50 cents this year in our contracts, and we're paying $4.50 a decatherm this year versus $4 last year. So when our obviously commodity prices are a little bit higher, we're giving back less credits. So, and then the other piece is just the spot market pricing of gas is a little bit higher this year than it was last year. On some of those things, I think we were down in the $1.80, $1.50, well below $2 last year towards the end of the year on some of those things. So, but still, significant amount of credits going back for the natural gas side. But overall, as Jared mentioned, things are trending well. I talked a little bit about the market sales last month. We only had a couple $1,000 in market sales this year, so we're going to be well below the budget that I put together. And I've addressed that. I brought the budget down for 2021, but we're actually trending above market sales from last year through November. Last year through November, we had 188,000 in market sales. This year, we're at about 240. So even with some of the lower pricing, we've still been able to push more power out in the market than we did last year on some of that. And then obviously we don't have the TransAlta revenue coming in, which was in the sales for resales, and that was about 503,000 through November of last year. So without that tolling contract, we just don't have that. And I mentioned that last month. But outside of a couple of those things, everything's trending well as far as consumption for the most part. From a financial standpoint, we're right above what we anticipated for the budget would be on that stuff. So, any questions on any of the financial stuff? Anything that you guys saw that you want to touch on? Looks pretty good on the circumstances of this year,
Yeah, absolutely. Yeah.
thankfully.
Any other questions, Commission? All right, I'll entertain a motion to approve the financial statements.
Move to approve.
I'll second.
Motion by Anthony and second by Matt to approve the financial statements. All in favor signify by saying aye.
Aye.
Any opposed? All right, open forum. I don't see any visitors here with us today. Takes us back into communication. And Mark.
I don't have anything today.
Jared, anything else?
I'll discuss the invoice club later, but we're also operating back to half staff, kind of up front. Last time we did that, we were not open. So this time we are open, the doors, so we're kind of closing for a half hour for lunch, just in case you get that question. Jeremy relayed that information to you. Other than that, I don't have a whole lot.
Okay. Jeremy?
Couple of things going on. Dave wanted me to mention to you guys if you hear any concerns or comments in the downtown Main Street. Some of the lights are going off and on and flickering, and some of them aren't working. So if you hear anything, just let people know that MnDOT is working on those things. They're aware of some of the wiring issues and concerns, so they're either being addressed now or they're going to be worked on. So those aren't our responsibility up here. Some of the things that we're responsible for the lighting piece on the project, they're still having issues with the final project. So MnDOT will be taking care of those things, and so hopefully those things will be resolved here in the not too distant future. But if you get any concerns or someone's asking you about them, let people know that they're being taken care of. MnDOT's working on them. Just getting stuff ready for year-end stuff. Gonna start working on reviews today after I hear my review. Gonna work through things. Gave you a little bit of update on the insurance, boiler, machinery topic that we're working through here. And so I sent off a bunch of the maintenance documents, our infrared testing and some of that stuff this afternoon. So we're overnighting it to Hartford. So hopefully we can work through that over the next week or two and see where we can land. I did send out the preliminary press release in the Bright Energy Choices program. I haven't heard anything back from any of you guys. If there's certainly something you want me to add, any additions in there, let me know here by the end of the week so I can get that sent out to our press, but get it on the media outlets. We'll send it to MMUA and MRS. We'll be, I'm sure, putting stuff in the paper as part of that program. But haven't heard anything, but if you have something, let me know. We're working through just updating a general contract with Broughton for their water services. They're in the process of doing water meter installations down there. And so our portion will be done. We're also working on kind of the data files and the logic system in the back end here, January, February timeframe. So we'll be working on those things. And then once we get that stuff tested, we'll be importing their meter reads for their water meters along with their gas, electric, into one big data file and then sending the data file back to Brown, and then they can do their billing off of that. But I need to adjust the contract because right now it only calls for the electric and gas services. So we do need to add the water meter services and just pulling in their reads. So I'll be working on that with Lori down in Broughton. On that, we did get the solar bids in. We went through that stuff over the last week. Angie and Dave and I sat down, kind of went through things a little bit in more detail yesterday. There is some competitive pricing in there. I do have some questions from Mark that him and I talked a little bit about before the meeting that we'll work through, but I would ask, I don't know if Angie has sent anything out to you guys yet, but I would ask you guys to think about a date in January, if there's a time in January where we can get together and have a separate meeting to kind of go through the results, talk about some of the different options that we have. We thought that'd be more of an appropriate time for, I would guess, an hour to do that versus having it on the January's agenda. So take a look at your calendars and let Angie know, and she can send some, let us know what maybe dates are available and times that might work for you guys. And we'll send you information ahead of time, but there's different size systems, there's different looks of some of those things, and so we want to get a gauge from you guys of what type of system, how big a system. Like there were several, I think we had 8 vendors provide bids, and several vendors, you know, submitted 2 options, or some submitted 3 or 4 options, and so there's a lot of different things we need to work through and kind of get a gauge from where you guys are interested in going. But definitely some really good pricing, you know, mid-30s, upper 30s dollars a megawatt, which is cheaper than our wholesale costs right now. So there's definitely some viable options for this consideration. So we'll go through that, and then they did start excavating on the pad up here at Plant 2. So they pulled the dirt out. Jerky was out there today excavating the stuff, and so we're waiting for some testing from MPCA on the soils before we can take that stuff to the landfill, and then they'll backfill and get that ready for the concrete foundation to be poured. So we're working through that, and then I've been sending out some legislative items to you guys with some of the preliminary stuff that's being talked about. Obviously, the session will be coming in full force after the first year, but just giving you guys a gauge of kind of what's on docket moving forward. So it's kind of what's going on here the last couple of weeks for me. So,
Any questions from the commission? All right. Takes us to the policy section. Nothing for review, nothing for change. And unfinished business, again, nothing to go over there. So item 8A, you have approval for Plant 2 transformer move.
so as part of the whole starting the foundation work and that project over there, getting the site ready, we had to obviously move the temporary transformer off of the pad out there so that stuff could be excavated. And so we brought Vic's crane in to do really 2 things. Move the temporary transformer off of the pad up there back into storage. And then we also had a transformer that was purchased, I think, either the end of 2018 or early 19, which was a replacement transformer down there that sized the transformer smaller for the load down there so that we're not wasting energy. We were going to try to get that moved this spring back down there, but obviously with COVID hitting and there was still some work being done down there with the generators, pushed it back into the fall. Of course, pushed that back into the fall with, we were still working on construction projects and services, which is still working on. And so they thought, well, there was no need to really get that one in anytime soon, so they waited and coordinated at the same time that we had to move this transformer off of the pilot plant too, that we would take the new transformer that we purchased a year and a half ago roughly, and move that back down and get that put in. So the requisition that's in front of you is for Vic's Crane to come out and move the two transformers, the one back in inventory, the new one down to the downtown plant for the installation. So CE Power coordinated the efforts, obviously, of the transformer, since they're the engineering firm that's on that does the commissioning and works through all the setups and the relays and some of that stuff. And so that's what's in front of you today, is to approve that invoice for the crane work that need to be done, so.
Okay. Any questions or discussion from the commission?
Make a motion to approve requisition 8588.
I'll second it.
Motion by Monty and second by Bob to approve the Plant 2 transformer move. All in favor signify by saying aye.
Aye.
Any opposed? Motion passes. Item 8B, approve customer service credit card vendor change to Invoice Cloud.
Alright, so I thought I'd start with a quick little background. So we started with Paymentus when we were with Logis. When we switched to the point and pay software in 2017, at that time, the only option for live data, where if somebody paid online, it would immediately show up in our software, was point and pay with BSNA. That was the only option. Invoice Cloud, shortly after we signed, had an agreement with BSNA, and then the city went with Invoice Cloud about a year later, so I think 18, so 2 years for the city on Invoice Cloud. We had a 3-year contract, so that was up here this last year. I do have somewhat of a background with Invoice Cloud. When we were with Logis, I sat in on meetings when Logis was going to switch providers. Not so much switch providers, but give a couple options. They were getting away from the PCI compliance and just having it all be a vendor. So I sat in on those meetings and we narrowed it down to given the choice of Paymentus and Invoice Cloud, and they gave a few meetings between that. I think we would have probably gone with Invoice Cloud back then, and I have heard that there's only one place with Logis that uses Paymentus, the rest use Invoice Cloud, so that's a pretty good recommendation there. I will say the only drawback is probably cost. If you look at that cost sheet on that first attachment, you'll see it's about 50% more, which equates to about $10,000. I will say those costs will probably increase because one of Invoice Cloud's claim to fame is they get more people on automated payments. And obviously the more those go up, the more they get paid. But in the long run, that's probably better for us too, with more operational efficiencies with staff. We lose postage and billing on those. We've also had mail issues, a few times. Just this month, I think the bills were probably about 3 days later than normal. I assume that's because of mail being behind schedule in general this time of year. I know the city also is probably, I think they were around 20%. They saw an increase in usage of e-billing and automated payments. Some of the benefits are there's way more technological ways to pay. They offer pay by text. So if your customer signs up, they'll just send you a text. You just say pay, yes or no. Apple Pay, Google Pay, and that's an option as well with this one. Ease of use is a big benefit. I know our customer service employees aren't happy with point and pay. They can't help the customer nearly as much, and customers don't like it as well. it'll be pretty much exactly the same as the city, so if you guys have used that for your water utility billing, it'll be very similar to that. Also less downtime, I talked to the city, they have very little downtime, we're down at least once a month, I don't know if, not an extended period of time, but. And then in April of this year, they didn't even take out the automatic credit cards, the reoccurring credit cards. So that was just a month. I'm on reoccurring credit cards, and so my bill just didn't get paid that month. So, any other questions?
I could make a comment. I'm a little familiar with the invoice cloud because we've been looking into it in our office, and we've also checked around with a number of other companies that use it, and it's a superior product. They really.
Yeah, I agree.
You know, you're looking at the additional cost, but it's going to allow you a lot more flexibility down the road on everything you can do. So, yeah, I think it's a good move.
Yeah, I'd agree with you too. Just the customer side of things too is way more robust. Ease them going in, checking your stuff, automation, all those things. So,
At the moment, we do still plan to do the automatic payments if you use your bank account in-house. I might look to add that to Invoice Cloud. We just figured the cost wasn't worth it, but he called me today and was offering about half what he was offering before, so I'll probably look into that in the future. But at the moment, Sue will handle that here.
I know the users that currently have it really like it. They really compliment it highly, or it's highly regarded, I should say, you know.
Yeah, like I said, I'm pretty sure that would have been our choice had we stayed with Logis instead of switching to BSNA. I'm pretty sure it would have been Invoice Cloud back then.
Is there any cost to leave Point and Pay?
No, part of it why I didn't do this a few months ago is because I had our contract automatically renewed for a year. So I can't technically do this till like March or April, but we're just getting the ball started. So my plan was to do this about 3 or 4 months ago otherwise, once I decided this was the route I wanted to go, but I assumed they wanted like a 2-month notice, so I guess it's a year notice, so.
My feedback on this is actually from a ratepayer standpoint. I do my payments to Hutch Utilities on several accounts on monthly recurring credit cards too. And I actually had some credit card fraud and had to close that credit card, get a new number, and had to update my credit card number, both on Point and Pay with Hutch Utilities and with Invoice Cloud with the city. And the cities took me like 5 minutes, and Hutch Utilities took me like 2 days. Not even exaggerating. And I call the gals, and they're great, but they're like, I'm really sorry, but we can't see any of that stuff. I can't help you at all. So my feedback is certainly the one that the city has.
And the city was on
much
Point and
different.
Pay as well when they first switched to BSNA.
Actually, Anthony brings up a good point. What do the employees think?
They also they've been asking me all year when we're finally gonna do this, so.
Okay.
So as a ratepayer, I think the customer, this should be viewed as an extension of our utility service to our ratepayers.
correct.
And if it doesn't feel comfortable and it doesn't feel like we're servicing our ratepayers, I think it's probably worth the premium. That'd be my opinion.
And you know, employees are usually adverse to changing things because that means more work in the interim, so that's probably a good recommendation too,
Yep.
the fact that they want to change.
So I'll make a motion to approve.
I'll second.
All right, we have a motion by Matt and second by Anthony to approve the customer service credit card vendor change to Invoice Cloud. All in favor signify by saying aye.
Aye.
Any opposed? Motion passes. You built a good case there. All right, item 8C, approve moving the 2020 pay grid.
So one of the things we have to do, obviously every year, along with the budget and the CIP, is update the pay grid based on the commission's recommendation of where they want to go. We did go through the preliminary budget back in November. At that time, I had instituted or put in a 2% pay grid shift. Personnel costs represent that 2%. I think several months ago I did give you a couple of the different cost options between a 0%, a 1.5%, and a 2%. So as I went through the preliminary budget in November, I did have the 2%. I haven't heard anything from anyone to the contrary of adjusting the budgets at this point. Obviously, we certainly still can do that today. The commission would want to do that, and I would just update the budgets. But based on some of the parameters that we typically use in the past, looking at some of the different CPIUs and CPIWs from the US to the metro area, to what's going on in employee turnover, to the bargaining units, to some of the other upper Midwest salary data I'm collecting. I've provided you guys some reference points to kind of where we're seeing things moving. And so I've attached a recommended 2% pay grid shift to the board to consider, again, which is currently in the final proposed budget. Numbers are in the back of day too, but obviously it's really up to you guys with where you guys want to move the grid as we move forward. So I've typically been seeing on the labor side of things, the union side of things, as I've looked at data there. A lot of the municipal utilities, if they haven't settled, they're contemplating settling. The ones that have settled for things for 2020 and 2021, they're anywhere from 2.5 to 2.8. I would say, so our 3.25 is maybe a hair higher than some of those other ones. But when I looked at the average, or I think at the 15, I looked at the average is about 2.6 on the union contracts that settle on the union side of things. So that's gives you just an indication of where things are at relative to the non-union side of things on that piece. Those are things that obviously we'll keep looking at as we move forward. We've talked about obviously the union contracts coming up in 2021 too, so we'll need some committee members to sit on that to renegotiate those as we move forward into 2022. But for today, the union, the non-union grid shift is really non-union employees, which make up 53 employees. So, any questions on the grid shift? Any questions on any of the metrics? Any other considerations out there?
The only question I have on the grid itself is on the dollar range on the 2021. So the dollar figures all look like they've increased as the grid shifted, but the per hour rate?
Yeah, so we sent out a revised one. Did you get that?
Oh, I did. So it just didn't make it in the packet.
Yeah,
Okay,
so
yeah. Gotcha.
we caught that after the packet went out. The formulas came out of the 2020 hourly rate thing, so it was hard numbers.
That's right.
So I put the formulas back.
I did look at that. I'm just reading it again. I'm like, that doesn't seem right.
Yeah.
Sorry, I should have printed them out and had it in
Yeah.
front of you
No,
as well.
you sent them.
Oh,
You
you
did
sent
your
them.
job.
Yeah.
I could have still printed them out, sorry.
Yeah. I don't have any other questions. Makes sense to
The
me.
2021 numbers are correct. It was the 2020 hourly rate
That
that
went down.
something
Gotcha.
happened with the formulas came out when I did the convert to PDF file for whatever reason.
Any other questions from the commission?
I got no questions.
No.
Yeah.
Good. I would make a motion to approve the proposed 2021 non-union pay grid adjustment at 2%.
I'll second.
Motion by Anthony and second by Monty to approve moving the 2020 pay grid to 2%. All in favor signify by saying aye.
Aye.
Any opposed? All right, item 8D, approve 2021 budgets and CIP.
So I've updated and highlighted some of the changes that have been made since the last preliminary budget presentation at the November meeting. The two really big items that I noted in here, obviously, and I sent you guys some additional information. The first one is an increase in our boiler machinery premium, $138,152. That's obviously a significant increase from what we had budgeted for in 2020, and I sent you guys those numbers. Gave a little indication of why that big increase is happening. Again, still working through trying to negotiate that piece down. That's part of the reason why we're providing more documentation, and I'll be obviously putting together some arguments of why our good track record and things doesn't justify that type of increase. Although I don't know how far that will go. We're seeing large increases in the machinery boiler all across the country. Some people are bidding, some are not. A lot of people, my biggest concern right now, outside of the cost, is just the lack of people wanting to bid in this realm. So I'm still waiting to hear back from travelers of why they decided not to bid. The indication is they didn't like something in the engineering report. We're hoping to get that report so we can see what they didn't like about the engineering report that they submitted to the underwriters. But.
So Jeremy, on that topic, there's a couple things I'm hearing though. One is industry, nationwide, as an industry, we're seeing this happen where carriers are dropping out and prices are going up. Is that correct?
Yeah, I wouldn't necessarily there's a few carriers that I think are dropping out of the area, but I think overall, there's still enough carriers in the business. But what you're seeing is the secondary insurers, they've been taking a lot of hits with the wildfires, with the hurricanes, with the catastrophes. So what they're telling their lead insurers is you need to start charging more premiums so we can cover our money, build up our reserves. And so you're seeing an increased premium cost, significant increases on that side, particularly the machinery and boiler, because you're seeing a lot of damage with a lot of these natural disasters in the utility industry. So for the ones that are staying in the business, they're going to obviously increase their premiums significantly to cover the risk. The other piece that we're seeing with Hartford is they're obviously asking us to increase, or they're saying your deductible is going up on your large plan. So that's part of their proposal, as well as not only are you going to see a significant premium increase, but yet your deductible, which you had at $500,000, is going to go to $1 million. Some of these other carriers, we had, I kind of listed, there were about 8 carriers in there. Some just declined. We just don't want to be in the business right now in that area of machinery and boiler. It doesn't necessarily have to do with the electric and gas industry. It's just the machinery and boiler area altogether. It's just too risky for some of these carriers. They'd rather stay in more of the property insurance, which is less risky. Some of the carriers that we've talked to, they won't provide us a quote unless they get the property insurance side of the business as well. But we're with the League of Minnesota Cities now, which is significantly reasonable in pricing, and we typically get dividends back every year. So we don't believe that they're going to be competitive at anywhere near on the property side of things. What that creates, though, is it creates less people bidding on our stuff, because they don't want just the high risk stuff. They want to be able to charge a premium on the low risk and blend that premium together. So that's an area, like I mentioned in the email, that we're going to have to spend more time on next year from a risk management standpoint to really see what other options we have, what other things can we do to keep some reasonable coverage on some of our major assets. We did talk about self-insuring some portions of our valuation. Hartford basically said you can start whacking out some of your valuation. It doesn't going to really change the premium much with that. If we reduce some of our lower valued stuff, some of our substation stuff, some of our distribution transmission, and just insure the main generator plants, that would bring that premium down significantly. They said that isn't going to make much of a difference, because obviously they know most of the risk is in your generating facilities, right? But pieces of equipment that are running, and some of those things, and that's where most of our value is. So we need to work through some of those things. I am curious on the engineering report on Travelers, what they saw in some of our distribution transmission areas. I got an indication generally that maybe they didn't like some of our substation things or some of our transformer things. I'm not quite sure what that is. They've been reluctant to give us a report, so we're going to work with their broker to try to give us as much information as they can. If they can't give us the actual engineering report, that they give us the general concerns that they have, because we're following industry standards and protocols. We're following all manufacturers' requirements. We're actually going above and beyond on a lot of our transformer and substation testing. They require it once a year. We do it every 6 months, infrared testing, sound testing. So we go above and beyond what we feel are the industry's norms and standards. So we're hoping to get a little bit more indication on that, because if there's some concerns that puts us out of the market with some carriers because they don't like the way we're maintaining things, or we have structural setups and things, we want to know that so we can evaluate that and say, hey, is there ability to do something different? Is there some different standards that we should be looking at from a carrier standpoint in the market, that they view things differently than, and from an insurance standpoint, than what the energy industry views as far as appropriate maintenance and things of that nature. So, but I don't know. I mean, that's going to be a long process to work with these carriers throughout the next year and try to figure out a better risk management standpoint, risk mitigation standpoint. So I do have in the budget that amount. Is we may have to go with that carrier for this year, for 2021, try to figure out if there's some other options that we can do for 2022. So that's in the budget. The Bright Energy Choices program that you guys approved at the November meeting is in, so that added $78,000 in Bright Energy Choices expenditures for that program, and then some modest furniture upgrades for the commission room for the new chairs. And then back down the distribution study, we had estimated 25,000, that came back at 20,000, so I adjusted the distribution study down. That needs to be done this year, just to make sure our distribution system is adequately sized and that we don't have any issues with, as we adjust RTUs and our SCADA systems and our breakers and our relays and things, with the change in generators at the plant, with the new substation up here, that the voltage and everything that we have running through our main feeders is appropriately set, and so that part of that distribution study is gonna give us a revised analysis of how our system is operating. Do we have any weak spots in voltage in certain areas? Do we not? Same thing with the transmission side of the study that I sent you guys. Those types of studies haven't been done in an exhaustive one in 10 years, so we need to update that to see where we're at infrastructure-wise from that. So those were adjustments on the operating budget side of things. Most of those were all on the electric division side. So that's where obviously you would look at electric division side as been reduced as far as profit down to more of a loss. And then on the CIP, nothing's changed on that side, so there was no change in the preliminary budget on that, so. Any questions on those 4 changes that?
I was just wondering on that insurance side, with the machinery boiler insurance you're talking, when have there been some value increases involved in it too, where they updated some of that?
That was part of our increase
Last year.
Yeah.
Yep, so when we went from that 70,000 roughly in 19 to 122 in 2020, about half of that increase was from increased valuation, predominantly on the natural gas side. We didn't have really anything in the machinery and boiler insured on that side, so a lot of our interconnect stations, some of our remote stations, none of that was in there. So part of the increase was the increased valuation.
Yeah.
The other part of that increase, I wouldn't say it was quite a 50-50 split, probably a 60-40 split. The other part of that was the increased premium to start recovering some of the loss on the claim. So Jared and I had anticipated an increase from that this year. Moving forward, just what's going on in the industry and what we're hearing from brokers and carriers, I don't think either of us expected to see that significant of an increase on there. We talked about, do you just try to self-insure everything and just not go with the carrier? The unfortunate part is we've got such large, expensive assets that if we have a major catastrophe in a generator downtown that leaches over and the building starts on fire or something and it knocks out 2 units, we don't have $20 million of cash sitting around to fix a lot of that stuff. So, so we still need to have some type of insurance on our heavy value pieces of equipment. The building and some of that content, that's insured underneath the league, the property stuff and the building content, but it's the actual physical machinery that, without some type of coverage on that, we lend ourselves to having significant cash balances that we need to set aside for some major issue that happens. And so we'll try to work through that analysis a little bit more this year and try to figure out what other options we have on that piece. So,
Jeremy, in other industries, and I don't know if this is even possible in one, utility industry, but 2, in municipal world. In other industries, there's been pools of businesses that self-insure for the exact reason that they're capital-intensive industries and have a lot of insurance that they pay, but don't have the cash to truly do self-insure themselves. So when they create a pool of folks in their industry, collectively they can. Is that even an option to consider? Is that in place in the utility line of business at all right now? Is that something you want to, certainly not a play for now, and it might take time to get into one, but is that something you have heard of or are aware of?
I've certainly obviously heard of it, self-insure, and that's what League Minnesota City started back in the 80s. A lot of the insurance
The same
companies,
concept.
yeah, weren't going to insure municipal and government, so they started League Minnesota City to self-insure that area. I don't particularly hear a lot of it in the energy industry, although I'm going to inquire about, is there a way to start looking into a self-insurance pool? If we're going to have these major players just not bidding in the industry, that's gonna have to spur stuff nationally, because we're not gonna be the only ones that are gonna be facing the same issue. Anyone that's got large generating facilities and things, they're gonna be seeing the same type of increases, because these carriers that we're using, they're the national global ones. And these aren't small carriers, these are the large ones, and so I would anticipate a lot of stuff moving in the next year. You're gonna start securing a lot more of that through these forums, through APPA, through APGA, of those same types of concerns coming up. The other piece that concerns me a little bit, which I've tried to make the argument, is I get we're in the same industry, but we're in a less risky area of the country, and so we don't have the 12 hurricanes a year, we don't have the wildfires up here, so I get the fact that we're in that type of business, but there's gotta be some discounted concessions for, we have a good proven track record here, we hardly have any claims. The last claim we've had was, what was that, a 25 megawatt generator back in 2000, so we've had 2 claims in 20 years. We don't have a ton of floods, we don't have a ton of fires, that you gotta be able to try to look at those areas and those utilities and those businesses where they're having repeat exposure and adjust those a little bit more incrementally than just passing the cost into everyone in the industry. So I'm gonna check into some of that stuff as well, and just kind of see where we can go on that. But the self-insurance piece is definitely something I wanna check into to see if there's been conversation about that, if there's a willingness to do that.
I'm guessing you reached out to other utilities to find out who their carriers are?
Yep.
And are they running into the same issues at this point too, with the rate of increase or the dollar amount?
Yeah, there's rate increases. I don't know if they're the same type of rate increases that we're getting. And we've had this recent claim that obviously probably plays some factor into that piece. Some of the municipals don't quite have some of the asset valuations that we have. Some of them have the smaller generators like this. Some of them don't have the big baseload plants like that. That has a ton of valuation there as well. And that's the one that kind of drives some of the premium up there. But there are seeing increases. I mean, the property side of things, just nationally, they're seeing about a 20% increase on just the property side of things. So everyone's seeing those. I was actually surprised the league's increases weren't as high as what we had anticipated. They were talking in that 15 to 20%, and I think the leagues came in back and I think the property was actually flat.
Property was flat.
And the automobile and the general liability, they kind of offset each other, a couple, 3-4%. So they actually came in pretty good, which means they had enough reserves and margins there to not pass on an increase. But outside the league, a lot of the other main carriers for the property and the general liability and that, they are seeing the 10-20% increase in that side, which is a less risky business, and those are large increases. So if you got any other thoughts or things that you kind of think about that piece that you want to relay, please send them my way. But this is an area that's going to take a little bit more time next year to work on other options to see where else we can go, what other options we have versus that. Now, I did also hear a lot of times when you change carriers, they increase your premium because they don't know who you are, they don't know your track record. And a lot of times in the business, if you stay with a carrier for a while, they see that stuff, that they start ratcheting down your premiums. I don't know if that's gonna be true or not, but we'll see, so. So those are kind of the main things, but certainly information, like I said, you guys have in that area that I think would be helpful. We'd gladly take any of that information on if we come across something, so.
Luckily, we have an insurance expert in-house.
There's a hardening of the market taking place. That's part of what you're seeing. At the commercial side, the markets are hardening, they're seeing, so it isn't where they're just 1 or 2 increase in the premiums, they're all gonna do that, you know. They don't have the investment income coming in like they did. You're gonna get it somewhere.
That's kind of what I'm hearing too. That's kind of what Gallagher said, is just the hardening of the market in the different years where it's all, everything's increasing. Again, I think we fully expected an increase on that. That just seems to be a little kind of out of my comfort zone of, but it's hard to justify that piece, but I know people are taking less risks too with things going on, the uncertainties of COVID and what the long-term economics are going to be for your business.
Our agent also mentioned the investments, that they're just not making anything on investments. So
Yep.
it's good to hear you say that, just to know he's telling us the truth too there.
Just be thankful we're not in California.
I know.
Yeah, those homeowners can't even find insurance if they're out in the rural areas, you know?
I was reading some articles over the last week, they're getting more pressure to put, utilities to put things underground because of the insurance claims are becoming outrageous. And they think there's gonna be more regulatory requirements to move that direction. So,
Yeah.
You know,
at least we're sitting pretty good from that standpoint, but it ain't gonna help those people that have to spend hundreds of millions of dollars to go underground with infrastructure through bedrock and it passes.
Good discussion. Any other questions from the commission on the budget and CIP? Entertain a motion.
I'll make a motion to approve the 2021 electrical and natural gas operating budget for the year.
Second.
So we have a motion by Bob, second by Matt to approve the 2021 budgets and CIP. All in favor signify by saying aye.
Aye.
Any opposed?
John, can I make a note?
Absolutely.
I'm not opposed, but can I make a note at the end of this? I had very few questions, and I think it's a reflection of not about the budget, and it's not a reflection of because I'm not interested or not challenged by it. I think it's just because it was well thought out, well presented, and consistent with the expectations of the commission, at least for myself. And any changes and variations have been very clearly defined and noted. So I think, Jeremy, if you don't hear anything from the commission, it's not because we don't care. It's just kind of because you answer our questions, would be my take. And so to you, good job on that.
Thanks. And the staff as well, they put together a good budget on the operating side.
Yeah, yeah, I would just agree with that completely. Very clear and everything is well spelled out for us. Makes it easy to go through. Good. Thanks, Anthony. All right, the next item on the agenda is the closed session to conduct the performance review of the Utilities General Manager, Jeremy Carter. Under Minnesota Statutes 13D.05 subdivision 3A, Jeremy, as you know, under Minnesota law, you have the right to either have this portion of the meeting open or closed. So before we go any further, you need to let us know whether you'd want to have the meeting closed or not.
I'd like to have it closed, please.
So I would now entertain a motion to go into closed session to conduct the annual performance review of the Utilities General Manager, Jeremy Carter.
So moved. Second.
All right, motion by Monty and seconded by Matt to go into closed session to conduct Jeremy Carter's annual review. All in favor signify by saying aye.
Aye.
Any opposed?
Excuse me, email a photo of your decorated vehicle to marketing team at grhsonline.org. All participants in the Christmas parade must remain in their vehicles, and they ask that participants do not carpool with individuals who live outside of their household, as they need to prevent the spread of COVID-19. When you arrive on campus to the hospital, please follow the signage for the parade route, and the parade route can also